Well, they said the walk-up music was plenty, so I think we're good there. Good afternoon, everyone. Rob Long, CEO of Space Florida. First of all, I want to get out of the way. I want to make sure everyone survived last week's cold weather if you weren't here in Florida. I know we, down here anyway, we put our puffy jackets on when it went below 70, so it was a tough week, but we survived, and I'm glad you always did as well. It's an honor to be here today with this panel, and I'll let them introduce themselves in a second, but if you've looked at my bio, after 26 years on the DoD side, it has become clear to me after I switched over and started talking to companies about their needs as we try to help them grow from a Florida perspective. It's clear that understanding capital flows and the needs of early stage growth companies is something that you don't necessarily have a depth of knowledge of on the government side. So now that I've recovered from that, it's great to be here today. It's great to have this opportunity to explore, how can we better connect what companies need from both an early stage standpoint, what are investors looking at, and then of course, how do we make that all come together to support not only national security, but really what the future is for our nation and for national security. So with that, I will turn it over to the panel for their quick introductions. Andy?
Sure. Good afternoon, everyone. My name is Andy Magliochetti. I'm a co-founder and a managing partner at Iron Gate Capital Advisors. We are a venture capital platform focused on dual-use national security technologies, and among those technologies is a concentration in the space vertical. Typically, we invest, our sweet spot is seed through Series B, but there are certainly exceptions where we will do pre-seed or post-B financings as well.
I'm Andrew Rush. I am the co-founder and CEO of Starcatcher. We are a space-to-space power beaming company focused on building the world's first power grid in space to give satellites, space stations, and other rovers and hardware more power, higher concentrations of power, and power and eclipse to really unlock the second golden age of space and the full capabilities that we want to see our space assets have. Previous to Starcatcher, I was the president and CEO of Made in Space, which was founded in 2010. It was the first company to manufacture objects off the face of the planet. We did a lot of work with DoD, NASA, and other national security folks around satellites manufacturing and assembling themselves in space. Grew that company largely organically because of the capital markets that existed at the time, and sold that in 2020 to Redwire, where I became the president and chief operating officer of that firm and helped it grow and go public.
Chris?
Hi, I'm Chris Corella. I am the founding partner at EntreMantra. My background and what's informing some of my thoughts that I'll share today, after a technical, early career in technical roles, I had the opportunity to shift to business development and merger and acquisition activity at a Fortune 100 aerospace company. Then I made an adrenaline-inspiring decision to support the small businesses. So after 3 small businesses sequentially, I've just recently, actually today, I'm announcing a soft launch of this new venture, EntreMantra. And it's kind of a refreshing take on a traditional growth and go-to-market advisory firm where we will place embedded fractional leaders on your team to help with these journeys, and we'll use our PTS experience to kind of offer 2020 vision to founders and growth stage businesses.
Thanks. Hello, everyone. I'm Claire Martin. I'm the Executive Vice President of Astroscale US. Astroscale is a company that is dedicated to on-orbit servicing, in particular in the space mobility area here in the US. As a company, we are now further along the funding journey as we floated and went public last year. But I was employee number 3 in the US, so it's quite a journey of experience to bring to this panel.
Great, thanks. We'll hit Q&A here in a little bit after we get through some of the kind of main themes of what we want to cover, but please feel free to tee those up for us. I joked when we were prepping for this that I was just going to say go, and they were going to start telling us everything that is good and bad about where we stand. But when you look at the big picture, it becomes clearer and clearer that the gap between government demand, government desires, and the capital needed to meet those demands, especially as a company's trying to grow, generate revenue, earnings, et cetera. And so I'll start with maybe more so from the founder side, and Andrew Rush, if you want to just start, maybe what's been your experience, good and bad, when you try to navigate some of those areas?
Yeah, I joke with people that when I was leading Made in Space, we had to grow that company organically because unless your name was Elon Musk or you were building a remote sensing company, you couldn't raise venture capital in the mid-2010s. We grew. We were fortunate to grow by our customers, both NASA, DoD, and also organizations like CASIS and the ISS National Lab, to allow us to do more with relatively little resources. And they're, through SBIR, through open BAAs, through pitching just direct work to different organizations, we were able to grow profitably and build a business that did a lot and was we were quite proud of and was successful. And then we were able to sell the firm to, at the time, a kind of unique, or uniquely premised company in Redwire that was saying, hey, there's a lot of small companies doing awesome things. Let's deploy some capital, bring them together, and through their powers combined to do more. Now, today, as I'm sort of starting my third space company journey, there are gaps between what the government wants and what commercial wants and where companies are starting out. But I honestly think that I feel like it's a little bit easy mode because there are so many folks that recognize the power of commercial space, recognize the power of people like me and Chris saying, look, we have this new technology and we think it will be helpful for the warfighter here or for commercial there, and are willing to kind of give us the rope to hang ourselves by or grow. And both from a capital markets perspective, there's every flavor of capital, whereas that wasn't true 10 or 15 years ago. And there are many vehicles that DoD and NASA both have to help you grow. Now, none of those organizations come to you and say, here's a roadmap and follow these steps and you should build an amazing company. It's a circuitous and often unclear path to success. But there are a lot of really amazing resources out there, and I'm really excited to see those resources work together and going forward and integrate even more, right? Communication between DoD and VC and NASA and VC and commercial, all of that's really, really positive.
Great. Chris, I know you have a similar journey that you want to share?
Same but different, it sounds like, yeah. So really admire what Andrew was able to do at Redwire, and my experience has been in aerospace, energy, and for the last 7 years, specifically the space sector, with a company called Benchmark Space Systems, who uses partnership and collaboration as a necessity to success, but also was filling a very specific small part in the value chain of providing integrated in-space mobility systems. So some of my experience, and I'll get to the commercial side, but based on the audience and the day we're up here, I'll talk a little bit about the government and national security side. One of the challenges right now with the early adolescence of Space Force has been the focus on commercial services, where we don't really have a service to offer. So that acquisition strategy is extremely limiting and feels like positions the old guard or the primes or the billionaire-backed startups for success. But there's a lot of critical pieces of hardware and software in that value stack that aren't seen and are invisible and are very hard to invest in unless they have a seat at that table and they're engaging. So what I think about how we can, what my experience in that led me to do is start differentiating the innovation base from the industrial base. So we often look out at the industrial base to solve problems, but it's the innovation base where we get our OODA loop and our development time down, and we find these nuggets of supply chain or value chain that will be broken when we go to find them. So I would encourage us to, rather than a vertical integration of a mission as a service or space service, parallel integration, engagement from the full value chain, and creating environments where that can happen, so that we have every piece getting developed in parallel, and that takes a bit of collaboration and cooperation. And that includes, we've had advocacy at the command level, warfighter. The S&T community has been great for us as a subsystem developer or for Benchmark. So some of the right things are happening there, but I think we can move faster. And one of the analogies I make is if the Army decided that infantry was going to buy every logistics piece as a service overnight, is there a table where people are asking, is there bulletproof glass? Do they have the right sheet metal? Do they have the right engine? Do they have the right tires or tracks? That conversation has to happen for space as well. And on the commercial side, similar effect, but the cause on the commercial side that I experienced was this gold rush frenzy of capital coming into into this emerging space economy. And again, the large unicorn, full value stack stories were investable and stuck out. And the rest of the pieces are kind of lost in that gold rush, or as I did at United Technologies, that piece will be there when I need it. But that's not the case. People are looking for lemons when they need it, but a lemon tree takes 7 years to give you that fruit. So we have to have that conversation sooner. So that's a little bit from my experience.
That's great, thanks. And Claire, I'll turn to you. Obviously, Astroscale's in a little bit different position currently. I'm just going public recently. I mean, what are your thoughts?
So the journey of Astroscale was a little different from Andrew's. So we took a lot of equity investment to start with, raised a lot of money, and used that to fund some extensive internal R&D to get the early experience, the early capability demonstrations. And then as we have progressed through the journey, we grew to the ability to actually take debt, and then eventually we floated on the stock exchange last year. Throughout that journey, it's being very aware of who your investors are and where your money is coming from. So in the very early stages of the company, sort of pre-seeds and A rounds and things, the investment is often as much in the people and the leaders of the company, as well as the idea and the vision of the company. At the other end of that scale, there's now quarterly reports, and the shareholders look at much more of the facts of the contracts you're closing, the deliveries you're making, and your pipeline. So you need to, as the company evolves, be very conscious of how you're presenting your story to the people that are investing in the company at that stage. For a company specifically focused in the space mobility area, we took two very early strategic decisions that shaped a little bit the way we grew. The first is we made a strategic choice that we wanted to be Astroscale in 50 years. So we weren't shaping a company whereby we were trying to go for an exit within a set number of years. The first strategy session I sat in was Astroscale 2050, right? So that backdrop shapes some of the decisions you make as you go along. And the second one was to focus not just on the technology to solve the problem, but on, if you like, the capabilities required to address on-orbit servicing. And those are technology as well as the economics of the problem and the policy challenges. And General Shaw's comments this morning and his Venn diagram, where we had the civil and the commercial and the national security, is actually spot on from the way we view it. The capabilities can be common across those. What the capabilities to deliver what national security needs are very similar to the capabilities that the commercial market needs. But the actual service that they require, the solution that they need from Astroscale is different. So you can try to piece those capabilities together in a different way, and then just add the deltas that the different markets need. That Venn diagram is not 100% overlap.
Very good. Thank you. Well, and obviously, Andy, there's three, I'll say, company perspectives or founder perspectives. What's your thoughts from more of the investor side?
Sure. I mean, and I know we're going to talk a little bit later about sort of, what our views are on how DoD and government generally is engaging with the community, but I wanted to answer the question just a little bit differently from an equity investor perspective. How many founders are in the audience today? Okay. So, deals are getting done. To your point, this is a great time to be investing in space. There's never been a better time to raise equity in kind of the early stage space segment. So I thought I would sort of go over 4 things that I see as to why companies are not successfully raising equity at the early stage, given the things I just said. And sort of the first of those is they're not effectively parsing engineering milestones in such a fashion to show how they're burning down risk over time, like in explaining their story to prospective investors. And I think that actually holds true for government customers as well. The next is the lack of a very clear differentiation in their technology platform or the solution they're offering, and kind of how that's going to allow them to compete for in a competitive marketplace for specific capabilities. Lastly, a federal strategy that can be misaligned from a timing perspective, right? To say, okay, look, we have a federal strategy that takes us from T to T+6, but not a lot of deep thinking on how do you get from T to T+60, right? And then the last point, and I know we're going to dig into this deeper, is missing a well-considered capital optimization strategy, right? How eventually are they going to move away from perpetual equity and non-dilutive capital and shift towards more sophisticated tools to build the capital stack more efficiently, and also think about the future of their revenue away from that, again, T+6 or T+12 timetable.
Yeah, that's great. Along those lines, obviously we heard this morning and we've heard throughout the day, we talk a lot about the what and what needs to be done, but often we miss the how. We lose track of what are the real mechanisms to go do that. There's some tools that exist, well-intentioned tools. You have CIBR, DIO's got great programs. You have STRATFI. You have the Office of Strategic Capital is now, getting into the business, which are all great avenues by which, you can either optimize capital stacks or explore how to grow. So I'll open this as a general question for everybody, and maybe Claire, I'll start with you on that side. What are your thoughts on maybe some of the tools that exist now, and then what should we be doing on how can the government especially focus its resources to really, whether it's timelines, whether it's total capital available, whether it's debt versus equity, whatever those things are, I'd love to hear your thoughts on that.
Sure. So I had sort of 2 main thoughts about the mechanisms that exist. One, very Astroscale focused. So we are a foreign-owned company, which is one reason why we didn't follow Andrew's path, because we don't qualify as a small business under the Small Business Administration rules. So the majority of the SBIR, STTR, STRATFI, TACFI solutions were not available to Astroscale US. So that drove us down a different path in order to grow. The way that these mechanisms are set up in general, I think has naturally created what I would almost call a technical valley or a technology valley within the space industry. We put a lot of, in the SBIRs and the STRATFIs and things, good money into great R&D, trying something new, really trying to push the boundaries, taking a lot of risks. And yet, inherently, as an industry, we're pretty conservative. So especially when we're trying to address so a more established commercial market in, say, the telecoms industry, they want the on-orbit heritage. They want the proven experience and the proven technology. So you've got great R&D here, a need for the heritage here, and we are missing the mechanisms in the middle to help companies bridge that gap.
Great. Chris, Andrew, thoughts?
Well, we did have access to all of those, and they're still hard to access. But I think the types of programs that are in place, being conceived, being evolved, are excellent by structure and intent. How to allocate funding and priority is still kind of dependent on getting more of the value chain engaged. And that goes both commercial and defense markets. For investors, if you're part of a critical but fractional piece of the value stack, it's very hard to go to an investor with clear if-then statements. And that makes it hard to do a lot of this. So I think we have to be part of the, all parts of the value chain have to be part of the discussion, and we have to take an honest look about a little smarter on how to allocate that. On the commercial side, the gold rush frenzy's over, the color and terms that come with capital have changed and swayed a bit. On the defense side, there's a lot of opportunity to do the same and focus dollars in different ways. I hear a lot of threat briefings, but from my life, I could say, do we need another dollar in UpMass? There's a lot of money going to UpMass, but there's other issues and threats. Did anybody talk about those or allocate funding there? So I think figuring out how to divvy up budgets is still critically important. And then how to best use those mechanisms, both from big business and small business. My approach has always been cooperate and shepherd in the new technology. At UTC, it was great to find diamonds in the rough and bring them through, and it was very clear relationship of what we had to offer and what they had to offer. Space has been so competitive and exciting that I don't know if folks are having that conversation with the same type of candor as I'm used to.
So pull that thread, because why do you think people aren't having the same conversations that you're used to in other domains or other industries that you don't see on the space side?
Well, I think the risk posture is a little different in space. I did munitions. There's a lot of places to test that. Then I'm doing kinetic energy on orbit. Turns out there's no places to test that. And the risk posture of the primes and the contract holders is, if we miss, there is no test range. If I make a mistake, I'm risking billions of dollars that were lobbied for very discreetly. And so I think changing the risk posture and maybe incentivizing based on how much money are you getting from my taxes to your large DoD business. Now you have a part in pulling some of the innovation base into the industrial base and shepherding them in. And there were incentives in place that while I was at UTC, I could have been incentivized to do that, but instead, I either waited until it was a very good opportunity for a transaction, or way too late, I have a crisis, I didn't realize this thing didn't exist to buy, now I gotta go find somebody and clean them up as my own. Space is a little bit of a different environment.
Andrew, thoughts, especially on de-risking some of that?
Yeah, I think that something Andy said is actually really relevant here, which is having not an L+6, like a T to T+6 time frame, but a T to T+60 time frame. It sounds like Astroscale is taking that to a much longer kind of time scale. I think all of these tools, it's incumbent upon me as a founder, me as a small business executive, to view them as instruments, to go from TRL X to TRL 9 and go from nobody knows my product or service to I'm on every competent proposer for the next SDA tranche or whatever, or that I have shaped programs where my technology, my capability, my service is critical to delivering the capability the warfighter needs. There are a lot of folks that still live in the cyber-sitter world, and it's really cool to see brilliant technologists come up with new ideas. But the approach that we took at Made in Space and the approach that we're practicing at Starcatcher is to look at SBIR sitters, to look at STRATFI, TACFI, to look at directed programs and say, these are instruments for us to deliver the ultimate service of power provisioning in space. And to be tight with our customers and understand what proof points they need to see, to your point as well, what proof points they need to see for them to trust that new technology to be integrated into their $1 billion program that they discreetly lobbied for a long time. Northrop's not going to hand me a contract, much as I would love for them to do that. And the Space Force also isn't going to hand me a contract. But that's why I think in space, people get confused about how we land, how we get work. It's not sales. I'm not selling F-150s that come in a couple of different colors, but really are the same things. I'm doing business development. I'm selling programs. And the technological differentiation, how I showed the technological readiness level, how I showed the manufacturing readiness level, how I take things from innovation into industrial base, how I take things from prototyping into programs of record. We need to have that solid strategy, and then we need to walk that walk.
Yeah, it's part of the transition. When at the start, they're a great tool, right? You can be a little scrappier,
Right.
You can be a little bit more reactive. But as you move out of that phase and you want to really truly grow your company, you have to raise your view up and develop that strategy and turn your initially good ideas into a roadmap, into the solutions that you can then do the business development on and build your company that way. So there are companies that do enjoy living in that space, as you said, Andrew, right? They do enjoy living in the R&D and the SBIR research, and that is their strategic choice. That is absolutely fine. But to grow, then there is that point where you have to look to the horizon and develop that longer term plan.
Yeah, Andy, to Claire's point, we've talked about the optimization of capital stacks and when you hit valuation thresholds and you're not going to be able to raise any more equity, thoughts on how that de-risks this conversation? Or
Yeah. I mean, one thing to add to this conversation of sort of looking at SBIR Sitter Capital and STRATFI TACFI as tools that you're leveraging along the way, we as investors view those as signals, right? I mean, they're hugely important to actually doing the work of advancing technologies, but we also view those things as signals in terms of initial interest, ongoing interest, as we're sort of aiming towards moving towards a program. I think one of the things that would be super helpful is if there was a little bit better information sharing from the customer with both the investors and the founders at those earlier stages so that they could understand kind of, okay, how does this fit into the bigger picture in terms of what the end goal is, right? What's the actual acuity of need here? Or is this just something that you're sort of kicking the tires on the problem? I mean, I think it would help founders to prioritize their R&D efforts. I think it would help allocators to sort of prioritize where they're allocating capital. On the side of kind of capital optimization, and you and I have talked about this quite a bit. Like I mentioned initially, this idea for what is your roadmap for more effectively kind of leveraging tools aside from debt, non-dilutive capital. How are you partnering with organizations like, and let me give Rob a plug here, organizations like Rob that can bring to bear a variety of different resources, tools, programs, unique debt instruments that not only from an investor's perspective enhance your yield, but also for the founder kind of start to give you the opportunity to hit your stride in the growth of your company. I think another part that's sort of frequently ignored there is, in particular with in-space assets, how are you starting out with, what is your long-term plan for laying off catastrophic risk too? Are you designing a system that can actually be insured against or not, right? When we look at like a couple great examples of people who've optimized from day one, what are they doing with capital? I don't know if Dylan or Matt from Voyager here, but sort of a masterclass in this idea of communicating to the investor, we are going to leverage venture capital to acquire majority interest in companies that are benefiting from non-dilutive capital with a goal towards a public exit. So in the first meeting, I understand what their long-term capital plan is the day they open their company. I mean, admittedly, that's a slightly different structure, and it's a more mature company that recently filed their S document. But I could look at something earlier, and this is a company that Space Florida has engaged with, like a Lone Star. I don't know, Lone Star is doing lunar data centers. Here's an example of a company that had a very creative capital structure from the very beginning. The company was founded, they acquired a very valuable piece of spectrum, right? The value of that spectrum it eclipsed the entire value of the equity cap stack from the first day. They leveraged non-dilutive capital by participating in the Intuitive Machine CLP program. Now, they've done it once successfully, proven part of their technology timetable, roadmap. They're about to do it again. We all knock on wood that there's a successful landing next month, right? And then the next iteration for them, after having proved that this technology worked and leveraging these tools, is to use venture capital to fund a prototype asset at, frankly, an amazingly low cost in lunar orbit, right? After they're able to prove that, the world opens to them in terms of bringing institutional financing to bear effectively on data offtake agreements. So thinking about like mature ways or sophisticated ways of thinking of designing your roadmap for your capital stack from the day you open, not doing it reactively, from an investor's perspective is very important. And I think from a founder's perspective can give you some confidence in, okay, I have a great plan again for T+6, T+12, but this is really what I'm going to tell investors what the ultimate end goal of the capitalization of the company is, and assure them that it's not going to be a black hole for equity forever.
Great, thanks, Andy. One thing I'll add in here, Chris, the poll has a great new place for your funds to get some funds, and the question was, where can I get an intra-mantra shirt? So it sounds like there's a demand signal for your next fund you could raise from there. But if we look bigger, we take a step back. The question I think is really going to come back around to, and then several of the questions that are here in the poll are pointing to this. What can the government do, right? We talked about there's gaps. There's talked about well-intentioned programs. What can the government do? We've talked about demand signals, and obviously having a demand signal is important. But when there's no funds behind that necessarily, that makes it difficult for especially early stage companies. Andrew, I'll start with you. Maybe if king for a day, if you will. What would be some of the things that you would really look for? Maybe not an actual tool itself, but the philosophy behind how you're going to either de-risk your opportunities to help you grow, or other options like that.
Yeah, I think that's a great question. And one of the areas that you can struggle with when interacting with the government as a customer is the government has myriad missions, but when you're talking to folks, you're not talking to everybody. You're talking to just individuals, and those individuals have one portion of the mission. And whether you're a really broad-based, like cross-cutting and impactful technology, like power beaming in space, or you're a really interesting subsystem, like an EP or an in-space propulsion system, it can be sometimes difficult when you're talking to one person and they'll say, well, that's really cool, but all I care about is this one, my mission, my mandate is this one soda straw. And so having the folks say, okay, how do I help these, maybe having part of their mandate be, hey, my one soda straw sees, you're relevant to this one piece of what I do, but here's some other folks that you can go talk to and tell them about it, and then we can come together in some cross-cutting way to support the evolution of either the broad-based technology or the subsystem that would be incrementally or really transformational and impactful. I think that's one area. The other area, and this is just a common refrain as a small business, is there's a lot of stuff that's classified in our sector. And even for folks that, like myself, that have worked, have supported those sorts of programs, once you leave the organization where you supported that, it's much more difficult to understand what's going on currently. And it can be difficult for the customers that say, that's really cool, but what you have is really cool, or maybe if you zigged instead of zagged, or made the light blue instead of green, that would really solve a problem of mine, but it's hard for them to have that conversation.
Yeah. Chris, your thoughts on? king for a day?
I don't want to be repetitive, so I'll try to find a new way to say the same thing. But, no, I think I would say having immersed but empowered solution architects within the DoD, I feel a kinship to the S&T community. They seem to be really innovating. But is there a position where they can affect budgets? Can they affect operational strategies? Do they have that voice yet? And that would help pull some of the necessary pieces in, I believe. And that, I'm not saying go full design authority on satellites overnight, but I think if we're going to say this is a contested domain, we have to accept that. Dual use gets you part of the way, but there's some special requirements there. And I think the DoD ought to be leading those discussions and that roadmap. I worked on the Black Hawk fleet, and the Navy wanted Romeos and Sierras, and they took some design authority over that. And then the Army said, well, then with the Mikes and the Limas, we're going to take full design authority over that. And I don't want to go there again, but leaning into the solution architecting and the road mapping, I think it's the best way to be good stewards of the resources that we're given any which way.
Great. And Claire, you kind of, you articulated very well where that gap is. Any thoughts on where you would recommend some changes or additions?
Yeah, well, first off, I can get a lot done in a day. So if I was queen for a whole day, I'd get a lot done. Anyway, but I think first off, where I would start is building a little bit on what Chris said. Actually, is I'd want to stop the rhetoric of commercial waits for government to provide requirements or government waits for commercial to have a service available. We need to be working together. So in my empowerment for the day, I would want to actually bring the people together and have that very, very direct and very honest conversation about the capabilities and the needs, not the requirements, but the needs, in order to start shaping that future, in order to be able to generate the demand signal, which is important from building a business plan, right, and a business case. I think after lunch, I would look very closely at the acquisition process. The speed cycle that we have right now is very slow, and it doesn't match the comments of needing to get there to address the threat, needing to be able to meet the warfighter's needs, and then it takes 2 years to contract. Okay, so that we need to be able to address that acquisition cycle as well. And then I might have a cup of tea and do something else, but I'll stop.
Andy, let me come back to you. You're welcome to kind of go through the King of the Day question, but I'd also like you to talk and get your perspective on, investing or approaching it from a VC perspective, especially when you're in a community or you're dealing with a larger VC community where, generative AI right now is really large, SaaS in general. That's a different model when you're in a VC investor as opposed to a very capital-intensive space technology firm. Can you talk a little bit about how that, and then feel free to jump in on what you'd fix overnight?
Yeah, I mean, I'll do what I'd fix first. Look, I actually think that programs are coming together well towards. I mean, everyone has sort of touched on this issue of opacity and information sharing, especially in sensitive environments, to kind of guide demand signals. But one thing I would like to see is, as these programs continue to mature and we're developing capabilities, is to shift towards developing capacity to scale those capabilities, right? And I think, we touched briefly before on, or maybe in our pre-panel discussion on, OSC bringing debt tools to bear. I mean, I think there are programs coming into Lens to build that capacity to scale the capabilities. Just as a side note, one thing I'd like to see is an investment tax credit that is better, right? I mean, it makes no sense to me that I can get a better tax credit investing in a car wash than I can a space company, right? That makes no sense. So I think there's some other policy levers we can pull there. As it relates to sort of the VC community generally, and I mentioned this earlier, more folks shifting to not just space, but hardware generally, because they're seeing that software has its own inherent risks in terms of, there's a great example this week. I mean, when we're looking at sort of the capital required to build an artificial intelligence model, obviously we need to verify these claims from China that this is actually what was brought to bear to get to this model. Software without inherent difficulties in replicating or rebuilding the platform at a dramatically lower cost, it presents its own risks, like we've seen this week. If you look at space, effectively, we're looking at software-enabled hardware. So in a way, I mean, these are software investments that have unique intellectual property and sort of, moats around them in terms of how difficult the problem are. I think the more traditional VCs that are trying to get into space investments are having a hard time wrapping their heads around kind of going from an underwriting practice that's looking at accumulating ARR based on a minimum amount of CapEx and a huge amount of sales expense, right, or CAC expense, where in this case it's frequently much more money on developing the platform, less on the CAC, right, and your exit looks very different. So I'm not sure if that answers your question, but I mean, we are seeing more investors participating in space, which is encouraging. We'd love for those investors to get a bit smarter on sort of how they should be underwriting these investments so that we can get to valuations that are fair for all participants.
Yeah, I think anything you can do along the lines of whether it's de-risking or providing more access, more options for capital, gives you some of those gaps or bridges some of those gaps that are out there. One of the questions that's definitely on everyone's minds, it appears, is consolidation. So this is going to give you a chance to put your future lens on where do you see the space industry going into the future. Is it more consolidation? Also, I'll get your perspectives on government demand versus commercial demand. That pendulum seems to swing a little bit back and forth. I feel like we're maybe going back toward the government side from a demand signal, but maybe not. So maybe Claire, I'll throw that down to you first and see what you thought, especially on industry consolidation.
Yeah, I mean, in all honesty, I think it's going to be a very interesting couple of years ahead of us. There are many different stages of growth of a company and many different valleys that companies have to navigate as they grow. And we had a huge boom in the small industries over the last few years. And I think we're reaching a point now where you are going to see some consolidation. You are going to see some successes and some failures. I've spoken to a couple of people this year in the industry as well, and everyone's sort of a similar mindset that this is actually going to be quite an interesting 12 to 24 months as we see how the market shapes out and how the company landscape changes in the coming months.
Yeah, good. Chris, your thoughts?
The question was, how do we see space evolving over the next
just the industry Is there going to be a consolidation? Is it going to continue? What are your thoughts on the future?
We've seen a lot of the consolidation start already. So that will continue, I believe. There's also a lot of opportunities and commercial businesses that are on the brink of closing their economic case. So that's going to create some more excitement, hopefully. But I would have to say, looking back at my cohort of startups and small businesses in the gold rush, I think there's an opportunity, and I would think to capture the re-energized investment that I would suspect as we see the commercial business cases closing and or the secret nuggets on the DoD side that are needed kind of get clearer. I think there's going to be well-informed investment and well-informed customers with a lot more clarity than there used to be. So be ready for and please contribute to those candid discussions because, I think the excitement really shifted from reality, and now we can ask the hard questions and make the right investments. In the gold rush, to me, it was equivalent of buying an arm's length of 50-50 tickets. But now we should know enough about, well, what do I actually want to spend my money on? I don't want to buy an arm's length of 50 tickets and invest in 50 launch companies or 200, whatever it may be. So I think we're going to get wise. We're all going to become better stewards. The environment's going to shift to be better stewards. That's it. Pass it down.
Andrew?
I think that we are entering a more thoughtful version of 2020 from an industry perspective. I mean, Stoke Space announced a big round. Voyager announced they're going public. Redwire announced a transformational acquisition. Blue Halo announced a really awesome outcome from an acquisition for their shareholders. I think Anduril is very clearly pushing in the space sector, whereas that was not something they were maybe really aggressive about a few years ago. And in-space propulsion technologies are ripe for consolidation, and consolidation and maturing those, maturing some of those businesses. There's folks with good technology that need capital to help them scale that and deliver on time. I think we're going to see the same thing from an edge compute, from an orbital data center kind of technology stack. And I think we will see, just like we would with Voyager going public, I think we will see, the folks leverage the public markets for growth capital, as well as take very mature businesses with more traditional fundamentals, strong EBITDA, et cetera, also avail themselves of the public markets. And I think we will also see folks like Astroscale that say, hey, we want to build an enduring thing. And here's the way that we're approaching that. I mean, that's certainly my ambition. And we'll also see folks that say, hey, like, I want to build something awesome, and I want to build an awesome small satellite bus manufacturer, and I want to scale that, show profitability, and deliver that to somebody who can take it to the next level in this next 5 years.
Yeah, thanks. Andy, your thoughts on what you guys see from?
I mean, I agree with everything you just said, Andrew. I mean, we are very confident that we're going to see an increase in IPO activity in 2025, right? We're already seeing M&A activity increase within our portfolio, right? Sort of inbound interest. I think we will continue to see consolidation and aggregation as, if you want to build an enduring company, if you want to build a longer timetable company, at some point you have to look at inorganic growth, right? It's just, you can. So I think if we're entering a 5-year period, in particular a 24-month period, where there's going to be quite a bit of M&A activity.
Yeah. Along those lines, are there things as we look to the future that the government side can do to help foster some of that? Are there, whether that's, you mentioned M&A activities, obviously there's international companies that can come together. Astroscale is a good example of having to navigate some of those inherent governmental requirements that are intended to protect national security, but at the same time naturally slow down or restrict your ability to grow, whether it's inorganically or otherwise. Thoughts on maybe more from a policy lens, what could be done to kind of help bridge that gap and break down some of those challenges that you see? Open it up to.
Yeah, I mean, just a couple of examples. I think a little bit more alignment and consistency in the policies would be useful. So, yeah, we are a foreign-owned company, but we're fully proxied. So we're completely firewalled off from our parent, yet we still don't qualify as a small business. So that's a contradiction to me. And then there's definitely talk of more reform in the export control, which would be fabulous. From a space mobility perspective especially, there are a couple of challenges that we're working very hard on, including things like spectrum allocation. So if you're doing something with mobility in space, you will naturally be changing your orbit, and therefore having spectrum available to do that is important. And then the simple fact of mission authorization as well from a space mobility perspective again. It's a unique mission set, so it's going to present some challenges, and we can get ahead of that.
Chris, thoughts?
The piece of the policy that I think affected me the most, or I would like to change from my last 7 years, maybe, and to get that seat at the table for the full value stack would be a way to cleanse or talk about the needs in a more open forum. There's a lot of folks conceiving in bubbles and vacuums what we need, but I think there's an opportunity to be better informed. So just if there's really a national security concern, then the way we handle secret information has to be looked at, and who can access and how do we do that. I think there is a way to cleanse that without taking on undue risk for national security, but get more of the solution architects involved in the discussion.
Right, thanks. Andrew?
I think, your question of, hey, what are ways that from policy perspective or maybe a tactical perspective, government can lean into this maybe forthcoming M&A activity is a good one. And I would almost approach it more from the tactical end of the spectrum. Like, Hart-Scott Tordino, CFIUS, all that stuff. That's just the environment, right, that we operate in. I think at the tactical level, one of the huge value propositions for M&A is the integration of new company into acquired company into the parent. And there's a couple areas with just making it a little easier for folks to merge cage codes without losing contract, losing past performance. That sounds really tactical, but it's really important because that delays us realizing the value ultimately for the government customer, right? Like if you're a larger company and you buy some awesome small company, you do it because you want to provide something awesome to your customer. But things like merging cage codes, keeping past performance, those are things that are impediments to providing that value. And also just from a government customer perspective, saying, hey, how is this going to help me? How can this help? Rather than, hey, is this a hindrance? That's more just an attitudinal approach. But those would be my perspective.
Great, thanks. Andy?
Yeah, I do think that you touched on FIRMA and CFIUS a little bit. I think if we are thinking about space more broadly, I think we need to reevaluate some components of FIRMA as it relates to some of the frameworks that are emerging around AUKUS and sort of other alliances, right? And that goes everywhere from consolidation to information sharing to potentially tax treaties to do with spaceports, right? So this idea of how do we move things from one location to another and perhaps look at adopting something that looks similar to a free port arrangement. I think there's plenty of low-hanging fruit in the international side of this that we could approach from kind of the perspective of the new day now, when we're seeing some more crisp comfort around information sharing and participation in specific sensitive technologies.
Thanks. Yes. We're coming up on time here. I want to make sure I have one more chance to let everybody kind of, give their last jabs or their last, solve world hunger comments. But, one of the things that I'd offer maybe to start that final conversation is, where we sit at Space Florida, we operate in a kind of industry/government realm. We get to kind of bridge that gap, and it allows us to take a different risk posture overall, especially when we consider how we can come alongside a company and help, whether it's growth or investment. And at the same time, we see inklings of that throughout history, even on the national government side. So I guess the one thing I leave with the crowd is, if you're on the government side, even civil or DoD, really think through how you can change the model in terms of investing, whether it's equity investing or not. You can probably go after a valuation difference in terms of the equity that you're going to achieve for that much differently than let's say a VC firm would, or PE or angel investors. Because the government's risk posture is just different. So that's kind of my one takeaway as I've sat here now for a little while. But I want to give just Claire. I'll start with you. Got 2-3 minutes left here. If you have any final comments you wanted to add to the group.
I'm just some final thoughts. I think from Astroscale's perspective, from our perspective as dedicated to on-orbit servicing, then we're ready. We're ready to help solve the problem for the warfighter. So I really want to encourage the conversation to continue, to keep doing the work that we are doing together, and move forward. And then for any founders in the room, I don't know if you could see them, Andy, but I can't see a thing for all the lights. So
yeah,
there could be nobody out there, but anyway. For all the founders in the room, hang on tight. It's a journey. It's going to take a lot of hard work, but it is also a lot of fun.
Okay. Chris, last thoughts?
I'll build off it's a journey. So the analogy we use at Entre Mantra, which might sound a little hippy-dippy or alternative, but if you know me, there's a reason why. But it is a journey. And a lot of my statements were, intentional for the audience, and we're at the Space Mobility Conference with the DoD and AATS presence. But to the small businesses, it's a journey. A lot of these suggestions or wishes that I shared are not necessity. They're catalysts. And that work is being done by a lot of hardworking founders out there. So I would just leave with a little more optimism than criticism and say it can be done despite my wishes not being met yet. So I'd encourage all the founders to take the insights from the entire panel and put them to use, and don't wait for someone to invite you into that success. That's not going to come to you like that.
Thanks. Andrew?
Yeah, actually, I think that Chris, that's a great point. I feel like as a founder, where I have been most successful is looking at the playing field and saying this is, and accepting it as it is. Like accepting the way ITAR is, accepting the way procurement rules are, accepting the timescale from award to first dollar in your bank account on a given program, and then also working with my customer, working with my government partners to deliver the value that they are looking for, and saying, look, there's a series of instruments out there that we can exercise, whether it is dilutive capital, non-dilutive capital, grants, SBIRs, all those sorts of things, to move the TRL level up, to de-risk the technology, to de-risk the market, and ultimately deliver something that can be transformational and impactful. And keeping an eye on that ball the whole time, but that it is kind of this windy road to get there.
Yeah, absolutely. Andy?
Yeah, I mean, I'd add on a positive note as well. I mean, look at where we are today in having a conversation about how does the private sector and government work together towards the outcomes that we both want. And if you compare where we are today versus where we were 10 years ago, I mean, I think we've made remarkable progress. So it's encouraging to me to see that this conversation between stakeholders from the investment community, from the founder and technology community and government are all working together truly towards a common interest and trying to optimize those processes to advance us further and more quickly.
Yeah, well, I can't really say it too much better than what Andy just said. I think it was an opportunity for us to get up here and talk through some of these issues. I want to thank AETS team. I want to thank the Space Mobility team and Ryan for giving us this opportunity to do that, and look forward to meeting and talking with you all maybe out in the hallway here. Thanks a lot. Appreciate it.
Thanks, everyone.